Okay, so very good morning, everyone. I did a quick breakdown about my US dollar CAD position yesterday. It was a lovely textbook looking setup, to be honest, using the DXY. There was pretty much no reason not to take that. So I won't waste your time going over that again. But if you did want to have a look at a type of textbook, we can call it a textbook looking aggressive position. Particularly on US dollar CAD, because price hadn't broken most recent structures to the downside um, in terms of this area here. Then we came back up. It's I'd call it a bit of a hybrid because you're using a session high. You're always using exactly that, the session high. But what's important to recognize is how price continues to respect that session high, but continues to trade away from it. Therefore, as soon as price gets back, it's then down to us to identify a lower time frame break of structure, or in this instance, I'd call it an intricate break of structure on the 15-minute time frame. And you guys are bored of hearing it now, but one line will do it. And there's the structure that price was failing to break below. As soon as I saw that move in the market, it's then down to me to identify the order block. Hey, Denise, very good morning. How are you? Good stuff. Maybe you're not able to unmute yourself, but I hope you're doing well, Denise. But essentially was then able to identify the order block left up at the highs, and then it was pretty much textbook from that moment onwards. A quick flick back to the DXY, and the DXY was right up. I think I got rid of the 15-minute order block now. DXY, the DXY was, where was it? Where was it? Here to the left-hand side. The DXY came perfectly up into this order block to the left-hand side. Well, let me get more fingers and toes at the moment, team. Give me a moment. Um, been, so that's mitigated. So this one it would have been here. No, that's Monday. You'll have to take my word for it. It's there somewhere. However, the DXY it just came up into a 50-minute order block. It didn't give the lower time frame shift, but what we did have was a bearish engulfing candle, and it just looked textbook. Therefore, I took the short position on US dollar CAD. Anyway, here and now for today, let me get straight onto it. The DXY, still, I'm anticipating that move to the downside. Why? Higher highs, expecting the higher low. Where could that higher low be? Well, our most restricted area from the higher low, or rather, when we get that movement from the area, would be the 4-hour 50 MA. The reason I'm saying that is because price has now broken above it. It's left an order block behind as well. Therefore, if we were to look at that in terms of a trading range, that would make very good sense for price as one line would do it. We've broken above the area and we're looking now bullish into the area high as a result of breaking most recent highs into the higher low form. In my opinion, this could well be where the DXY could turn around and slightly move towards the upside. If I'm wrong, we could get the continued fall on that DXY, and we'll go over all scenarios that's related to that. When what this area is indeed refined still from that bearish engulfing candle on the daily time frame. Why? It's the only daily order block that's actually available, and this daily candle in particular that's still highlighted most certainly broke structure points to the left-hand side because it is a bearish engulfing. It's then left us with that daily order block. So once we start to refine all those areas down, here is exactly where we are. And then we revert to 4-hour time frame, looking at our structures first and foremost. And what we can say is, of course, the DXY made a high. In my opinion, this is the key structure point. So if we don't turn around, let's say in this area here, then my anticipation would be for the DXY to roll all the way back down to this area, in which if it's broken, then for me, it would flip most of the bias on its head, particularly if we get a daily candle closure below that area. Then in terms of looking for a push off from that area, I might actually be looking for the rejection for that lower low back down to the weekly 50 MA, where we also have that daily order block down here. So it all makes sense at the moment. Hence why trading, we're simply just waiting, in my opinion, for price really just to pull back. And that's as a result of, in my opinion, the DXY just moving normally for once. So that's a port of call at the moment. And when we refine those areas down, particularly up at the highs, to look for the rejection on the DXY towards the downside, which would give light to our cross pair positions. This is why at the moment I feel that that's the reason why compared to yesterday, I'm not in a position at the moment because the DXY hasn't tapped into any of those areas that naturally I'd be looking to either short from or long from. So I think we've got ample time to set our charts up and get to the day ahead. So when we look to refine this order block down, if you hold your eyes for a moment, refine that order block, we're here, 15-minute order block. And again, keep asking yourself, why that 15-minute order block? What has it done? Well, it's the only 15-minute order block available in the refined area of the daily time frame that again, one line would do it. Here's the line. And of course, you can see that price was making lower lows and lower highs, but the dramatic low had come from this area just here. So if price then wants to return back up to that refined area, don't forget, it's not just a 15-minute order block. This has come all the way from your daily time frame, refined to 4, now into the 15. So there is some emphasis on that area. And again, it's not for us then to think, okay, we'll enter blindly. It's going to make the lower low because Charles said so. We're looking for a reaction. And then when we get that reaction, it's down to us to first and foremost identify, are we going to wait for a significant break of structure on the DXY, or are we going to wait for an intricate break of structure from the DXY and then head over to the cross pair, which could then provide us with a better break of structure like US dollar CAD yesterday. I had the break of structure on the 15, but I didn't have the break of structure clearly on the DXY, but the DXY held the area, hence why it made sense on US dollar CAD with the confluence with the DXY. It's a great position in my opinion. So that's what I'm waiting for at the moment for the DXY to pull up to this area, and then I'll head over to my cross pairs to see what's available. In the immediacy, this 15-minute order block is more, it's not that I'd be looking for rejection from the area in terms of let's wait for the DXY to come back down here to then look to capitalize on DXY strength. It's more so if the DXY is to pull back up to this area, then I'd be looking to manage my position based on this order block or this area in the market where I foresee in terms of most recent price action, what we can say is we have had a push from here, but failing that, this would be a management area. Not to say that I'd be looking to close my position off on a cross pair. However, but as a result of there are other 15-minute order blocks available is what I'm trying to get at. It's just a 15-minute order block below Asia that more often than not, if I were to take an Asia position, I'd be looking to highlight a 15-minute order block above or below Asia. Therefore, if I'm going to take a position, which would be an Asia range position, it's all going to tie in. So I'll go straight to now the position that I'm looking at in terms of Asia range, and we can see why it makes sense. So if I'm looking at just a flip-flop back to the DXY, look at the distance. We're looking at a potential Asia range, let's say for good example, an Asia range long position on the DXY for us to refill Asia back up to these highs. Now, if I flip-flop back to AUD USD, look at the similarities. It's just the inverse. Therefore, for me, this is a much better looking Asia range position because first and foremost, have we broken structure points to the left-hand side? So we've got a low in the market created here, expecting a lower high. That lower high is now confirmed as a result of the lower low breaking most recent structure points. Therefore, if price then returns back up to that 15-minute order block, I'll be looking for a lower time frame 1-minute break of structure, and then I'll take the short back down to fill Asia. So I think that's the first position of the day that I'm pretty much gearing up to take. I just need to wait for Asia to close, of course, then allow us to identify a structure point within Asia, which I can see is around about here, just by looking at it sort of with me optically. And then when London opens, what I'd be expecting to see is London pop up into that 15-minute order block, break, or there are two ports that you're able to use. If London then opens, doesn't return to the 15-minute order block, but breaks Asia and then comes back, I'll be looking to take that 1-minute break of structure, but a very, very slight 1-minute break of structure. What I mean by that, not necessarily price trending up like so. And then I'll be looking for that. What I'd be happy to see is a candlestick formation i.e. a bearish engulfing candle, let's say on the 1 minute time frame, that then gives me a 1 minute order block to take a position from, and then I'll be happy to take that aggressively to then be managing my position by where I would be expecting price to take off from. Alternatively, then if price doesn't break this low, then I would have to wait for a clear break of structure, i.e. that, and then the order block selection up at the highs. Then once price then returns, it's then for me. But as soon as I've got that break of structure or the 1 minute time frame, then I'll be looking to take a position like so. So that's AUD USD. I quite like the short based on Asia range only. So that's simply using 15-minute time frame. But the reason why I'm happy to take that is because I can already identify a position on the DXY where if I was to look at the DXY for an Asia range position, I think it looks quite nice to the highs. Therefore, if DXY looks quite nice to the highs, then let me use that US dollar strength in the immediacy and look see if I can move towards break even. So that's the first, I'd say, nice looking position of the day. Whilst we're on AU, I really like the longs based on the higher time frame directional bias as well. So AU is pretty much a firm favorite for me today. It's right there up at the highs. Now, in terms of the longs, the reason for that starting higher time frame weekly order block, we can see if we are going to, let's say, base our analysis on that higher time frame, we've got that high in the market created by this area here. Why? It's a weekly order block that's available. So when we start to refine that weekly order block down, you can see just here, that's exactly where we are. And again, well, why that order block? Well, it's the only order block available. And then do we have any evidence to support that? Well, of course, we've made a high from this area also. And if we look to the left-hand side, we've broken structure points to the left-hand side. So we are definitely looking to trade alongside what's going on, what we can see at the moment, high, potential higher low for maybe a higher high. But what I'd like to suggest more is maybe just a reaction. We've got more chance of a reaction coming out of that area than we have for a higher high. So if we bring our, let's say, our anticipations a little bit closer, then I think we'll be able to get in positions, manage them better, and then just forget about the expectations of what could happen. It will be a good position regardless of you getting that higher high, or even if you were to take a loss from that area. For me personally, it still looks like a nice position. As we start to then refine those areas down, here is a nice session low in the market. The reason why, much like US dollar CAD, we can see an area in the market where prices failing to break below. But in terms of why I call it a session high, so we're stepping up. There's a high, we've come back, we've made another high, we've come back, we've made another high, and we're coming back. So therefore, based on the facts, I'm not telling any lies. The candlesticks are telling me this. Here is an area where there is potential liquidity for me. If price comes back down to it, I could just get a reaction from there. So that's an area in the market where I'm liking at the moment. And then when we start to refine that 4 hour order block down, it's all about patience here, in my opinion. At this time, we've still got this 15-minute order block that was there yesterday. I don't feel discouraged that price hasn't come back down into the area. I still think this is the best area. In fact, not even a thing. It just is the best area to look for that position long from, unless price on the 15-minute time frame just smashes up through all of these areas. Then of course I'll be looking for, well, where did that break come from? And I'll restart the analysis again on that 15-minute time frame. The reason why I won't have to start the analysis again on the 4 hour is because the order block would be exactly the same, if not slightly smaller, because you can see just here, bullish engulfing candle. And then if I clear this up for you guys to have a better look, 255. So if we say 260, let's do it like that. You can see there is a new order block as a result of that bullish engulfing candle. Once we then put that on all intervals, you'll see we're in exactly the same area. The difference is if we break up from there, then I'd have to refine this area down. But with that said, because there are two areas, then my entry criteria is going to have to change. And what that would mean is I'd be looking for my highest degree of entry criteria here, and down on this 15-minute order block, then I'm going to be incredibly aggressive because let's face it, if I'm wrong here, then for me personally, this is how I see things. If I'm wrong here aggressively, that's on me because I know that there is a better area. If I'm wrong here aggressively, I don't mind so much because price has shown me that, well, there is an area above which I've been patient and my setup didn't wasn't provided. Therefore, if price comes down to the area that, well, in fact, is a much better area anyway, I'd be saying to myself, well, you've been very patient here. I'm happy to take an aggressive 1 minute break of structure from this area. So that's what I have at the moment on AU. I think it looks good in terms of the Asia range short and higher time frame directional towards the long. So we'll move on. US dollar CAD, it's got an amber, but we'll go for it nevertheless. So US dollar CAD, higher time frame, weekly order block, looking for price to come out towards the downside. Had a nice position on it yesterday. I won't bore you too much about it. We've already discussed it. But the session high, it's getting a bit old now, and we haven't the difference. Look how we've moved away. We've come back. I was expecting price to move away, and it hasn't. So therefore, it no longer has the power that we've seen that it has. And in fact, what we want to be seeing is when returning back to a session high, you want to see what I saw yesterday, a clear break to the lows. Therefore, when price gets in, it's now for you to be excited. The fact that we're now approaching the charts, now let's say when I entered, we didn't break the low, and now we're looking at the charts on a fresh day. We haven't made a new low. In fact, what you could argue, in fact, is that we're kind of stepping up in the opposite direction. Here's the high. This higher low is not lower than this low here. Therefore, we're stepping up. Therefore, if price then returns back to that session high, we then would have broken higher, well, not higher time frame, but we would have broken highs along the way. And what that would look like in the immediacy is an uptrend. Therefore, I'd be a little bit more tentative to reuse that session high. So what I've done is I've simply put an order block in the market instead of a session high. So in terms of my journal, it makes a little bit more sense because the order block selection would make more sense because session highs I'd be quite aggressive with because of what price has already done and developed. Order block selection, you can be aggressive with it, but it still depends on what price has done. So for me, it's that if price comes up into this order block first and foremost, it's then for me to wait for a break of structure for price then to return and take the short. If it came into the session high and we had this case scenario, then I'd be looking for something very similar to this. So at the moment, I'm not really feeling it with US dollar CAD just now. What I'd be more inclined to wait for is these highs. Now, I know it seems a bit far-fetched, but let's face it, if we come to the market in a couple of days and prices up here, then we're well prepared. So that's as a result of this 15, excuse me, the 4 hour order block refined from the range. It's the only order block that was available at the time. Then when we start to refine that order block down, we've got this 15-minute order block right up at the highs. But again, with that said, by the time price gets there, it's going to be incredibly bullish. Therefore, my entry criteria, I'm going to need to wait for some significant 15-minute breaks of structure before looking to take that short position. So at the minute, US dollar CAD, not too much, in my opinion, available for me personally. I've got this order block here down at the lows, but that would only be active if we start to break these highs and then pull back. And then I'll be looking for that lower time frame break of structure and I'll take the long position. And that would be then based on we've got a bit of a newer session low, if you see what I mean. So if we take this now and put it just here, we can say, right, well, is price stepping up? At some point in time, it did. Price has then come back down, failed to step up. Therefore, if price then comes back down to the area, pushes up, or rather, if price then pushes up, we can then say, well, price is now stepping up from the session low. But at this time, there's just not a lot going on for me personally on US dollar CAD. So it's got an amber, and the reason why I put it in that order is because you can see what looks great, AUD US dollar, and then you can just see what doesn't. So therefore, my attention currently is on AU. GU. I've marked this up, but I can't really remember what I was seeing on GU. Higher time frame, definitely not too much on the weekly. Daily time frame, still the same. So sorry if you've heard this all before, but we're looking at the daily time frame just because we've had a recent break of the lows. Is that slightly forcing it? Where is the line? Just there. And we'll bring that slightly, no, that one. We'll bring that slightly higher. Yeah, that's certainly a break. So therefore, the daily time frame is telling us, okay, potential lows coming out of that area. So we refine this daily order block down. We're looking for the reaction towards the downside at the moment. So that's all the way up here. In terms of, oh no, that's where we are. Okay, yeah, the range. Well, we'll talk about the short, and then we'll talk about we'll talk about the long rather, and then we'll talk about the range. So, the long position I quite like because we have a 4 hour time frame that's really trending quite nicely. And again, I love my illustrations. So we'll say high, higher low, higher high, price come back down to the higher low area. Do I have an order block there for me to look to refine? Yes, we do. 4 hour order block. What's the significance? Well, it's the lowest 4 hour order block available. And to be honest, in terms of the leg extension that created the high, it's the only 4 hour order block available. What I like about that is we're supported at a time on, I think no, that's unfortunate. Yesterday, we had the support from the daily 50 MA to look to push price higher. As well as the weekly, we'll have that for the duration of the week anyway. But yesterday it looked a little better because we had the support of that daily 50 MA. Today we've lost that support of the EMA. And in fact, if we are to take a long position, we're looking at EMA rejection to the downside, perhaps, for that low to be created. And that is a result of yesterday's candle closing below the daily 50 MA, this one just here. Therefore, we're no longer using it as support. It's more of a block, more so as a resistance to push price down back out of that 50 MA in the opposite direction. Nevertheless, we can understand why we could see a potential reaction from the area because yesterday, here was the 15-minute order block. Let's make that slightly bigger. Like this. Okay, that's not working. That's better. Yesterday, we had this 15-minute order block that I wanted price to come into. And it came into it and it respected it beautifully. But I didn't have the confirmation to look to take that position because I could still see there would have been a 15-minute order block here, but we didn't have the break like what we had on US dollar CAD. I really want to see, let's say if you were to force it, you could say, well, here is an area in the market. And then if you were to really do it, I would say correctly, I'd say, well, I'd want this area to be broken. And then even for the best type of textbook position that I'm sure most of you, if you were to back test, you'd look to wait for price to break and pull back would be here because it's the highest imbalance in the opposite direction, which actually you could say after this low created, lower high, lower low. Therefore, we remain bearish until this area is broken. Then we have the pullback for the long, then we're trading alongside 15-minute structure. So therefore, this area here, until that is broken, any long position becomes an aggressive position. And we understand what comes with aggressive positions. You need to start to manage your positions sooner rather than later. And what I always say is first in, you're probably going to have to be first to manage that position because you have no idea at what point after this low is created just here, where could the lower high be before the lower low is being created? And that just goes back to saying just because you're in your higher time frame refined area points of interest, it doesn't mean you look to take an immediate position. Of course, you can if you're that way aligned with risk. But for me personally, it really has to be highs and lows for me. I mean, there could have been an option to take that position, but I figured, well, let's wait for something first and foremost. So what we have waited for we could argue we now have. However, there is no 15-minute order block available anymore. Let me just refine this one away from the market because it's already been, in fact, let's just get rid of it entirely. That's already been used. We can say that that's been respected. Then as we start to move along and understand, okay, well, we've had a move that's broken most recent structure points. Where's the order block? There isn't one, unfortunately. There isn't one available. This one has now been mitigated. And the larger one who was mitigated immediately anyway by the candle next door. So we don't really have an area to trade from. So I don't mind that. But what that means is I need to wait for one to be created. And that's by way of bullish engulfing candle in the 15-minute time frame. A bullish engulfing candle will always allow you to select a 15-minute order block. Or just to simplify, a bullish engulfing candle, bullish or bearish bullish or bearish engulfing candle on any time frame will allow you to select the order block on the time frame that you're looking at. So bullish engulfing candle on the 15-minute time frame will deliver you with an order block to select on the 15. Then once price comes back down to that order block, it's then down to you, depending on if you perceive this as a valid enough break of structure. You might want to take that as a limit as soon as you've got that order block to select and price comes back, or to get the cherry on top of the cake, 1 minute break of structure. Now you're trading alongside 1 minute time frame or even a 5 minute break of structure, and then you're off you go. And where I'd be looking to manage that position, as we've mentioned, let me just double check the 4 hour time frame. Yeah, so 4 hour isn't great either. We don't have much range at all to look to take a long position. What I would love to see is a 4 hour candle close above that 4 hour order block, giving us support from now the 4 hour 50 MA. Once price closes above the 4 hour 50 MA, the next candle then, if I print it like so, the next candle will open and return back to the lows. We have 4 hours to use the strategy for the suggestion that it will reject the 4 hour 50 MA within the next 4 hours. So what that would be is the 4 hour candle closing bullish above is going to be our break of structure anyway. And then what we will have is this 4 hour candle that would print next would then be the return. And then when the wick is created, that would be, excuse me, the entry, and you move in towards break even. So I like GU for the long, but a little bit needs to develop for that to be a great trade as opposed to a good trade, or even an okay trade. But if I get price to give me that bullish engulfing candle down at the lows, it would be something that I'd be looking to consider. But you know where I'm going to be heading. I'll be heading to the DXY to understand, right, well, GU's in a nice position with an okay setup. What does the DXY look like? Does the DXY look like it could potentially weaken from the same area once price gets there? If I then get some good signs on the DXY that the DXY is looking to weaken, and I also have a 1 minute break of structure after I have that bullish engulfing on the 15, then perhaps I'd look to take that position. But I'm not busy today, so I'll update you guys as and when. I'm happy with what I see. So at the moment, nothing there. I need to wait at least for a 15-minute bullish engulfing candle because I don't have a 15-minute order block to trade from. So that's pretty simple, to be honest. A position that I wouldn't mind would be an Asia range short, so long as this Asia is available. Now, the reasons why. Low in the market, lower high, lower low created. Where was the lower low created from? Up at this area. Is there an order block there for me to use? Yes, there is. It's available. So the criteria again for the Asia range, so long as the lows are available, I would be looking for the lows of Asia to be filled within my trade, nothing more or nothing less. So what I need to see is exactly the same as most recent, a high in Asia that's broken. So let's say here's the high in Asia. We then want London to open, break that Asia low, or that Asia high rather, pull back, give me a 1 minute break of structure, look for the short. So the 1 minute break of structure would be an aggressive one since you've already had London show its intention. Then it's an aggressive 1 minute break of structure. If you do not then have Asia or London opening and breaking Asia highs, then you'd have to wait for a very clear break of structure when price comes back up to this 15-minute order block on the 1 minute time frame. So I don't mind that short position either. It's just what materializes first, I suppose. So not too much, but there is enough. There's enough to wait for. 15-minute bullish engulfing candle to take the long based on higher time frame directional buyers. Understand that if we don't have the 4 hour candle breaking above the area, our range is very limited to the 4 hour 50 MA. So if I were to take that position, I'd be looking to manage that pretty much, I won't say instantaneously, but when price moves off and gives me the rejection or the reaction, I will call that job done because the position is allowing me to move break even based on the fact that I have evidence that price could well reject and move lower anyway. So that's GU for me. Surprised I got the green, to be honest. There's a few conflicting areas in there, but it could work. EU next. EU yesterday wasn't really concerned about it. There was a range, well, there still is a range. And I'd say, well, I will only take the range position as to if there is nothing else available. Now, there is there is available positions, but not as much there was yesterday. Yesterday just looked beautiful across the board, waiting for pullbacks essentially. Now today is pretty much the same boat. The 4 hour order block hasn't been broken below, therefore we'll keep that on the chart. It's not supported by any higher time frame directional positions. It's just a 4 hour order block that we can say if we was looking at higher highs and higher lows it created a higher high break in most recent structure points to the left. Therefore, we look to identify where that break has taken place, and this is the order block that created it. Therefore, when price comes back into the order block, I'm looking for a rejection. However, we have had a rejection already that I would have been quite satisfied with. That's a good rejection. That's a good looking position from the area. Now price has returned back down to the area. It's pretty much the same criteria as the session highs that we were speaking about. What's really happening now from the area? Not too much at all. Look at the EMA performance. It's just going straight through the middle of price action. Therefore, for me, that's the first sign that price is ranging because I can no longer really rely upon that 4 hour 50 MA. It's not doing anything. Price is breaking above, breaking below, closing below, above and below, and so on and so forth. So it's a range. It's still a range for me personally. However, what I would be inclined to do, because as I mentioned, the first couple of pairs, aside from AU, the others are, it, for me personally, have the same degree of risk anyway, which would be just a loss without true breaks of structure. So what we can identify here is an immediate break of structure, but that's not good enough for me. Although this order block is selected, it's not good enough for me. I'm just starting to build up the bias and the confluence to look to take that position. If I see this, for better example, then I would look to take that position. Absolutely, because that would be the textbook type of range position I'm happy to take. And then if I were to say, well, what looks better? EU that has broken, in my opinion, a significant structure point, because there would be an order block here as well in order to take price lower. If I get that confirmation of price pushing towards the highs and then pulling back, for me, there's really no real difference between this either. Because I don't have the range based on the 4 hour or the daily EMA is actually working against me anyway. And then here on EU, well, we're in a range, so I'm not really relying on the 4 hour EMAs either. So it's pretty much of the sameness, if I can say that, if that makes sense. So again, a very clear plan. I'm not going to do anything with EU until I have a break of structure towards the highs. And then price is going to have to come back. Again, there will not be, well, there could be. At the moment, there isn't a 15-minute valid order block available because price has just tapped it. So I'm going to have to wait for the same criteria anyway. So that's going to be a bullish engulfing candle. Obviously, not to that extent, but you get the illustration, which is then going to leave me with a 15-minute order block left behind. And then I'll wait for a 1 minute break of structure in an aggressive manner before then looking to take that long, because I think that would be a nice looking range type of position. The range hasn't been executed immediately. We had a 15-minute order block to the left-hand side yesterday, and we've waited. We've waited to see what's going to happen. And I don't think at the moment we've waited long enough. Still want to see those breaks of structures pull back and then look for the long position. So for me, EU looks okay. For some reason, I've given EU a green over GU. Whatever I've seen a couple of hours ago, I'm just going to stick with that. And because usually when I wake up, I'm pretty sharp. So I'll keep that green. And so it's going to be EU over GU and potentially even US dollar CAD. We'll just have to see if we get that break of structure. For me, would I take that as an Asia range? No, because the other Asia ranges that we've seen, I think are very clear that the low has come from, let's say, the high. What I mean by that is the low here, because we've definitely broken structure points to the low. You can't argue that. But I can't really hand on heart say that break of structure, or this low created here, has come from here. If I'm being honest, I think it's come from a lot higher, if not this area where there's an order block. And is there anything higher? No. So for me personally, the low has really come if I'm going to look at an order block that's actually available, the low has come from here. So when I've got such, well, I wouldn't say such high degree of conflict, but for me, it's just clearer that the low hasn't come from this area. But what I will do, I'll give that area its flowers. There is an order block there, and I'm going to call it a structure point in the opposing direction. So I wouldn't sell from here, but certainly if price breaks that area and pulls back, then for me, that's a nice confluence that we've broken a structure point in the market. And then, even for better example, as a result of not really relying on the 4-hour 50 MA, however, if you were to rely on the 4-hour 50 MA and seek the liquidity beyond it, where you'd anticipate price to return to before the reaction, rejecting the 4-hour 50 MA, then I think here makes good sense. So for me, the EU, it really does look like quite a nice position on the basis that we get those breaks of structure. And what that could look like, let's say the order block is around that size. You'd want to put your stop loss below there, 10 pips, let's say max between 10 and 15 on EU. That now looks like a half a good trade, particularly when you have that break of structure you're no longer managing to here, but here is a nice risk to reward ratio. So that's what I've got on the EU today. I think that's pretty solid for EU. In terms of the shorts, well, price isn't there at the moment. So if it does get there, then I'll be sure I'll be updating you guys because as I said, I've got nothing to do today, apart from whatever the missus tells me to do eventually. So that's GU, excuse me, EU. GJ. Hmm. I don't mind GJ. It has a green. It doesn't deserve a green because I do remember GJ from this morning. So weekly time frame. Let's start all the way from the top. So we can see that we've made a high. We were using this wick imbalance from 2008, which price was rejecting actually and giving us some nice positions out to the lows. But what we can clearly see now is higher high, higher low, higher high created. That's the facts. Now. Trading alongside higher time frame for me would be looking for longs only. But what we can now and what we can see is a wick to the high last week on the weekly time frame. And we have the confirmation that after a high, what are we expecting? A higher low. Where would we expect the higher low to return back down to based on the strategy? The order block that caused the high. Therefore, do I have range back down to the order block to potentially take a short position? At the moment, yes, I do. But it's then for us to identify patterns, breaks of structure on the lower time frames and higher time frame potential order blocks in the short direction for us to then have the confidence to actually take that reversal type of position. I don't mind reversals, but I need to see quite a lot coming out of the market first and foremost. My first hesitance of taking the reversal position is this here. I would have much preferred to use an order block that's done something. What I mean by that is, yes, this is a bearish engulfing candle, but what I'd like to have seen is something a little bit like that. I'm not going to discredit the position altogether, but I just want to really show you guys the difference between okay, good, and great. So this would be great on a daily on any time frame. You really just want to see what is the order, what has that order block done for me to really say, right, I am now going to trade from this order block. Simple as that. We don't have that. I'm just making up stories, but that would look great. So at the moment, it's okay because it is a bearish engulfing candle. We have an order block left behind, and price is still yet to return back to the order block. Actually, let me just double check. Yeah, we tried to fill it, which could be a confluence that price may not even return back there. But the fact that there is a wick imbalance, we could do one step further and say, well, most of you guys are pretty new, but Denise knows I like wick imbalances because a wick imbalance tells me that there's liquidity sat there where price does not want to go above that area. Therefore, if price wants to return to that area, I have an additional confluence that price wants to, guess what? Reject it. Why? Because we're using the facts. The facts of the matter is we've rejected it before. So why are we not going to reject it now? And we're going to use the facts until we're simply proven otherwise. So that's a wick imbalance for me. But then look to place that on all intervals and see exactly where that lies. And we hope that once you put that wick imbalance on the chart, it makes sense. So That's the daily time frame. We've got a daily order block that we could potentially look to short from. Now it's down to us to identify price action and structure on the 4 hour time frame. So, what do we have first and foremost? And you can do this. I do it all the time. Higher low, higher high, higher low, meaning that here is a key structure point in the market. It's as simple as that. Then, do we have an order block in, let's play the game, in the upward direction where we can say, well, actually, we might just want to look for long positions in line with what's actually going on, despite price not returning to our higher time frame directional point of interest by way of this weekly order block. If I place that for you guys to see it, it's a hell of a way down on the 4 hour time frame. So we'll be referring only to the 4 hour time frame, which it does come with its risks because what's the point in doing your analysis on the weekly and the daily if you're not going to then use it? So there is a conflict first and foremost why I might not look for the long at the moment, but let's see what we have. So here is the order block on the 4 hour time frame that caused the most recent high in the market. Why would I like it? Well, there's a 4 hour 50 MA supporting potential longs towards the upside. So there's a reason to like it first and foremost. And then we and look at rather the performance of that 4 hour 50 MA for us to use the facts and say, okay, then if price wants to return back down to the 4 hour 50 MA, should I trust it? Well, if you can see here, we broke above the 4 hour 50 MA. Let me move that for you guys. I'm sure you can already see it. But you know I love my illustrations. We broke above, rejected the 4 hour 50 MA, come back down, rejected the 4 hour 50 MA, come back into it, rejected the 4 hour 50 MA. So why now if price comes back, that's going to look inappropriate. But if price comes back down to that area, I'm going to expect a rejection from the 4 hour 50 MA. Then it's down for us now to look at the liquidity underneath that 4 hour 50 MA if it makes sense to understand, well, if we're going to reject the 4 hour 50 MA, where could we reject from? Now we head to the lower time frames because there isn't a 4 hour order block available either. What I'm simply looking to do is use the current order block and refine an area down and hope that that order block underneath the 4 hour hasn't been mitigated. And if I bring up the 15-minute time frame for us all, here is where we are. So what has this 15-minute order block done at the moment? I wouldn't say too much, to be honest. I can't say, and look in the inverse direction that we can look at in terms of the short direction. We can say, well, price was making higher highs, call that a higher low. This is now confirmed as a result of the higher high. We've now made a low, lower high, break of structure. So this looks beautiful, does it not? However, this 15-minute order block, what has that done? It hasn't. Has it broken structures? Well, you can argue it, like on a couple of pairs that we were doing. So that's okay. That's great. And there is no there is valid reason why we haven't broken that. Because if we refer back to the daily time frame, that is the wick imbalance. So we're failing to break above now that wick imbalance where we have already identified that price doesn't want to push above that area. So that's then why it's telling us, well, if price doesn't want to push above that area, well, what should I be looking to do? So here's why, GJ, it's okay. I would like the short because if price wants to start trending above this area on the lower time frames, what confluence do we have from the daily time frame that we should now move to the downside? We have the wick imbalance. So don't forget, the wick imbalance is created or will be created, or the wick will be created in 13 hours and 45 minutes, despite there being a trend on the lower time frames. Once that wick imbalance has then been created, we would have exactly the same looking candle. So for me, although higher time frame we're long, I'm not going to actually be longing from my higher time frame directional point of interest. Therefore, for me, I'm going to use the wick imbalance and the daily order block to potentially have reasons why I now want to take a reversal. So I hope that makes sense how you really build the story up. It's not to say the longs aren't great, well, the longs are good because they are good, but this 15-minute order block at this time hasn't done too much for me. It hasn't broken above that wick imbalance. Let's say we get all of this. You have the push up and then you have price roll back down to the lows. Now I'd actually quite like the longs as well because I can say, well, actually from this area, we've managed to break structures on the 15-minute time frame. So then this position to take the long would be, well, it would just simply be a nice trading range. We've got reasons why we should be shorting from that area. We also have good valid reasons why we want to be longing from that area. But for me currently, I'm waiting for that. I'm waiting for price to break up this area, then I'll take the short, or even better still, if price, here's another scenario. If price breaks up, doesn't come into this area, then pulls back down, then I'll take the long. Absolutely. So that's the criteria. And I think that's GJ is a nice kind of one in the middle, which it works both ways. You can understand why you'd want to take shorts, you can understand why you'd want to take longs, but you'd also understand why it's probably best to wait. Because at this time, we've got the wick imbalance that could well be working against the long position until we can actually see on the lower time frames that price is broken up towards the upside. Therefore, as a result of this low created in the market, we're still in the realms of looking for lower high for a lower low continuation. So for me, if you're going to look at taking a long position immediately, it's a bit risky because we're in the move of potentially we've had the low, we've had the pullback, and price could well just trickling back on its way down to create that low. Even with that said, if the low is created and price then pops back up tomorrow, even better reason to take the short because now the 15 minutes developed. We then hope that the 4 hour order block has been broken to the downside as well. So therefore, it would all shape for a nice looking short position. So it looks okay at the moment. It could look good, and then even tomorrow it could look great. And just to tie that off nicely, what I mean by it could look great, here's a 4 hour order block that we've seen in the market supported by the 4 hour 50 MA. At some point in time, our strategy is going to fail, but that's only going to work for us afterwards. So what I mean by that is 4 hour order block, 4 hour 50 MA broken down to the downside. That's now giving us confirmation that this isn't just a move short, but actually this is now a low, lower high, lower low created. Therefore, once price wants to come back up, what are we now trading alongside? We're now trading alongside potential 4 hour structure that at some point we have to throw this out the window and understand that, yeah, we were bullish, but at some point we now need to understand that we've had a break, had a pullback, price is developing, pulling back, we've got to start entering. So that's what the difference is between where price is now, it's okay. Where price could be later based on a break, 4 hour close below would look great. And that's the difference between your journals, why it's so very much so important when you're journaling, taking these pictures and really understanding the types of position you're looking to take. Because let's face it, here's a 4 hour point of interest, refined 15-minute time, refined 15-minute order block. I know many of previous members that would just say, let me take that long position and then send me a message and ask why they've lost. And it's very difficult for me to go through all of that if they're not really fully understanding the difference between okay and good and great. And we don't mind taking okay trades. With the okay trades, you need to see confluence across the DXY, I'd say. Like yesterday. I mean, yesterday was a good trade with an okay confluence, I'd say. But I hope you guys can see the difference between it. And that's what I really want to try and emphasize moving forward, that there are positions everywhere and there will always be positions everywhere, but it depends on the type of positions that you want to take. And before I go on a rant, for example, a couple of weeks ago, I was on holiday and I thought, well, you know what? It's so very easy just to wait for great setups to develop. And not only that, it's easier for me to keep enjoying my holiday, set an alert when 15-minute price action is fully broken, set an alert when price returns back to the order block. If it happens, great, there's a good trade, a great trade. If it doesn't happen, well, I was only wanted to take great trades on holiday because it would annoy me otherwise. Um, so that's a difference team. So that's GJ, to be honest. What else? UJ. I was figuring there must be some more pairs. UJ. I don't mind UJ, but I need to see some DXY confluence. UJ, UJ, UJ. Where are we? Wick imbalances galore. So and to add to that, weekly time frame first and foremost. Weekly order block, we're expecting a reaction out of that weekly order block. Wicks thrown to the highs, wick imbalances there. I expect price to return to those wick imbalances. I want to see the liquidity in the area by way of order blocks. I then hope that where I'm putting these areas by way of wick imbalance, there is something there on the lower time frames. You can already see where I've put those wick imbalances that it's supported by 4 hour order blocks and 15-minute order blocks. That's great. So weekly time frame, that's all we're going to talk about. Weekly order block, we expect price to move out of it. And unfortunately, despite, let's say, DXY moving to the upside, I can't take a higher time frame directional position on UJ until the weekly candle does this and closes above it, because based on my strategy, I'm expecting a rejection from it despite whatever I might think, whatever Charles thinks, the strategy trumps what I think, unfortunately. And that's just that. So what I could do, just to finish off on that point, is the reason why then I've started to bring in 50-minute positions only, particularly with the Asia range, because that allows me to trade against my higher time frame directional bias, because there's many times where I see that my directional bias, yes, it's with the strategy, but actually I don't want to trade in that direction. I want to trade the opposite direction. And the way that I'm able to do that is referring to 15-minute time frame only. Anyway, we're not there. Refine this area down on the weekly time frame. Look at that bearish engulfing candle. And this is what I mean by candles that do something. We can say every other candle was also a daily candle. But look at the difference. This one just trumped every one of them, closing below 1, 2, 3, 4, 5. Just call it a week's day of price action. One candle wiped it out. Therefore, when price returns back to the order block left behind, what am I expecting? A reaction. We had that reaction last week, and we haven't closed above on the daily time frame. Therefore, my bias, just what I've explained on the weekly, until I get a daily candle close above that area, I'm going to still be looking to manipulate that area towards the downside, whether that's going to be by session highs, whether that's going to be by breaks of structure in the 4 hour. That's just how the cookie crumbles, unfortunately, with trading smart money concepts the way I do it. So I'm looking to refine that area down, and we're on the 4 hour time frame now. Let's have a look at 4 hour price action and structure. It's quite difficult because price going up was pretty parabolic, without any real pullbacks, in all honesty. So it's difficult to really clearly identify, let's say, higher highs and higher lows like that when price is just moving upward in one direction. But that's our job. If we're not comfortable doing it, move to another pair. Simple as that. So what we can see is a clear high in the market was caused from somewhere in and around this area. So therefore here for me remains, let's call it a key structure point, which also would suggest to me that until this area is broken to the downside, I'm still bullish. So I understand the risk that's coming from shorting when price action is bullish. There is the conflict right away. However, in the immediacy, because we're intraday traders, what we can say is one line will do it. An area in the market where price, you could say, was failing to break below. If we do something like that, price was failing to break below that area, and that bearish daily engulfing candle caused us this. Price then pulled back on the 4 hour time frame, back up into a 4 hour order block that was available, that caused that break of structure. Again, this is what I mean by order blocks. Why use it? What has it done? Has it broken structure point? We're going to argue, well, I'm going to argue in this instance that yes, it's done something. It's broken an area in the market. Prices pull back, but we're failing to make lower lows. So here's our first hold up. We're not trending on the 4 hour time frame, in my opinion, as clearly as I'd like to see in terms of looking for a short position. But then if you start to move price along, you can say the same thing again. Price came back up into that order block. We've broken most recent structure points. There is most certainly reason to take a short. This is what I'm trying to get at. Is there reason to take a short? And when I do my storytelling, but it's actually just using the facts of the candles, that's what I'm doing. I'm trying to either have reasons for or reasons against. And if there are too many reasons against, I'll just say, well, you know what? Let me just go to another pair. I won't trade at all. So currently, I think I've got some valid reasons for taking that short position. Now, here's a caveat to that. The daily 50 MA. It's not as far away, excuse me, the 4 hour 50 MA. We look to have a little bit of range, but not as much as I would like to, based on the fact that UJ are probably going to be using around 20 pips as a stop loss. So considering my range of 60 pips to that, that's 1 to 3 at a push. Consider that's if I get a really good entry with a bang on 20 pip stop loss and I go for a 1 to 3. So straight away, I'm seeing some elements that could move against me, which would mean by the time I enter that position, I'm probably going to have to move at break even because there isn't at break even sooner rather than later, rather, because there isn't too much range. And now let me just double check if there is another 4 hour order block that we could, yeah, because this started, no. So I would love to have used this order block. And then we could say, well, that is the reason why we're looking in the area because we've broken most recent lows. However, I don't know if you guys can also see it, but we've broken above that area. Therefore, for me, once you've broken above, same thing what I've mentioned on the daily and the weekly, you just have to get rid of it. So therefore, potential session highs, just like on US dollar CAD yesterday. High in the market, price is stepping away. High in the market, price has stepped away, breaking most recent lows. So maybe we'll return back up to the highs of the market. I'm seeing that 15-minute order block, but I'm not sure if it is available. Just a moment, and I'll go straight to it. Up at the highs. Yeah, it's been mitigated. So what I will have to do is zoom all the way back out and just highlight an area like this, making make sense. But that, again, that does not mean that when price comes into this area, Charles is shorting immediately. It means price has come to an area in the market where I have valid reason to anticipate a reaction from. I don't have an order block, and I'm not really too convinced about the session high. So what I'm going to need to do is have an order block delivered to me, first class. Therefore, 15-minute bearish engulfing candle. That's going to allow me to use an order block. And then because this is a cross pair with the DXY, I'll just be analyzing the DXY to the highest degree to understand, does the DXY look like it's going to be turning around from the same position? While we're there, let's have a quick look at the DXY to see where that could be. So we're looking for a price to return to the highs and give us a reaction. And look at that on the DXY. It's beautiful. So if the DXY comes up into this area, let me move my alert slightly higher, and we'll go below. If the DXY moves up into this position, it's then for me to revert straight back to UJ and understand, right, we're very similar at this time. So 15-minute bearish engulfing candle, lower time frame break of structure when price gets there, and then I'll be looking to short UJ as well. So I like quite a few pairs today, I'll be honest. But just to give you guys the heads up, this is definitely a reversal looking position in my opinion. We're very, very bullish without any clear breaks of structure on that 4 hour time frame. So this for me, it is down the bottom. It is amber because I have other reasons to wait for. And again, this is something that I want to try and emphasize moving forward. You have pairs that you're looking to trade, and even me personally, I've gone off of my main pairs because I've felt like it's too long to wait. And instead of waiting for my pair that could provide me with a good or a great setup, I've gone over to an additional pair that I don't often trade, my secondary type of pair, and I've taken an okay trade. So this is that type of scenario. For me, this is an okay trade, whereas I have a great looking trade that could develop at some point that I just have to wait for. So I personally am again trying to bring my trade volume down, revert back to my favorite pairs that I've been trading for 6 to 7 years, which is AU, EU, GU, and US dollar CAD. I could sometimes put that in there, which is just those four pairs. But again, that's trading. We always have the option. But for me, UJ, it's okay. But definitely you'd want to be looking for this 15-minute bearish engulfing candle to be developed first and foremost before taking a position. It's just a point of interest at the moment, and that it's as simple as that. And as you can see yesterday, this illustration is still on. So my thought process hasn't changed. Bearish engulfing, order block, break of structure, short. So I've just done the same again pretty much. So there we go. That's UJ for me. It's all right. It's okay. It's not the best. You could probably see a position. GCAD. GCAD's unfortunate. Again, a reversal type of position, but the facts are what goes up it's probably going to come back down at some stage. And my red industry, I have no idea when I put that on, but that was my thought process that GCAD was going to start moving towards the downside. So really what I was looking to have is price just start breaking those structure points. And by the time price really broke those structure points, price is it's just not pulling back, which is unfortunate, but when we're back testing, price does that, and price at some point may want to return. So it's just down to us to reanalyze that. So I won't waste your time too much on GCAP, but to be honest, the only realistic play that I could see materializing, I mean, we're pretty much in the middle. So I'm not going to be doing anything until an alert goes up at these highs. I've got an alert here just in, well, what did I see there? I wouldn't really have an alert for no reason. Probably the reason is if I had a form of pullback, what I'd want to be doing is not entering the trade when price pulls back, but I'd want to see what happens from the area. So let's quickly talk about that because there is nothing on GCAD, long story short. But what I mean by that is, of course, price is very bearish on the 15-minute time frame. And I don't know what order block to use, being honest. I don't know whether I should use this order block. I don't know whether I should use what is going on. I don't know whether I should use that order block. I don't know whether I should use this one up at the highs and so on and so forth. So I need the story to be told for me to actually tell the story, if that makes sense. And what I mean by that is if price comes up into this order block, I can't take a short position. I've got no reason to do so because that means I'd take a short here. That means I'd take a short from this order block. And then that means I've taken a short from this order block. And by the time I'm looking to then check my account balance, I'm 3% down for no reason. So therefore, we want the story to be told for us first and foremost. So I want price to come into whatever order block it wants and then develop. And then I'll be able to jump on the story. And hopefully by the time the move happens to the downside, not only are we looking at 15-minute time frame, but there's also going to be a refined area and we'll revert back to how we trade normally. So at the moment, there's just nothing on GCAD. What I can put in to start telling the story for well, I can't, no, that's weekly, sorry. I'm pretty sure there was an order block on the daily time frame. Yeah. So we've got an order block on the daily time frame. And then what we've done from there is we've refined this daily order block down, which I believe is what you can already see on the 4-hour time frame. So here's the daily. Let's sync that. Then within the daily, we had a, or now we have, well, we had a 4-hour order block based on the break of this structure point. Then price came back and we were looking to take a short position. But anyway, that's previous price action. Now we've got this daily order block. And if I get rid of this 4-hour order block just here, I can just about, is that valid? Yeah, it is. Cool. So we have a order block here on the 4-hour, which we can say, well, first and foremost, I'll let you guys fill in the gaps before I ruin the story for you. So what has the order block done is the first thing that I'm asking myself. And that order block, I can say at this point, has broken structure points to the low. So it could be one of those moves on GCAD where we're just going to have to sit patient in terms of the short and wait for price to return back to that area, which would of course be the best thing to do. And like I say, always, if you're back testing on the 4-hour time frame and you're clicking that button 10 times a second, it's not going to be too long back testing before you start seeing candlesticks revert back up into your point of interest. It's just all about what are we doing in between these developments of price action? Are we just taking okay or taking shit positions because we're impatient and we're not waiting for the better type of setup? I'll hold my hands up. We're all guilty of it. Trading gets very boring, especially for you guys. When you start to understand what you're doing, you're just going to see positions everywhere. You're going to go down to the 1 minute, you're going to go down to the 30-second breaks of structure, order block. It's so very easy once you understand what you're doing. But if we take a couple of step back and just say, you know what, let's take good and great. Let's forget about okay for a moment. If you're having issues with discipline or consistency, because the good and the great, they're just so easy to spot. And they're so easy to plan ahead. I mean, we've basically made a plan now for the week in terms of the 4 hour time frame. Once we put this order block on all intervals, which is not that one. That's what we've put in for that storytelling. We've got an order block up at the highs. Can I look to refine that order block down based on the 15-minute time frame? Yes, we can. It's right there up at the highs. All you need to do, this is pretty much what I'm doing when I go on holiday. There's an alert. Once price hits that alert, I'll wait for price action to give me a 15-minute bearish engulfing candle because the price has moved away from that area. Give me another order block to trade from. As soon as I get that engulfing candle, I'm setting a limit like that. Simple. And that is a plan for the pretty much the week ahead. If that doesn't materialize and price comes down to these lows before it moves back to the highs, then again, it's the same pot of call. We've got a plan in place, but I appreciate I won't waste your time on that plan just yet. It's more than likely we'll probably go over that tomorrow. So thanks everyone for listening to me rant as well as going over the charts. I hope it's helpful. If it wasn't, just shoot me a message and I'll go over things again for you. But for today, it's not as exciting as it was yesterday. But as I've mentioned, until my missus says we have to go food shopping, I'm probably going to sit here, watch a bit of TV, and yeah, just see what's going on for once. But thanks, Denise, Frank, and Rob for joining. Appreciate you guys for giving me your morning. And as I say, I hope it helps. And before you go, I think we have another live call tomorrow. Let me just double check. Where am I? Screen. There. Tomorrow, what's the time? Date rather, 15th. Yeah, same time tomorrow, Wednesday the 15th of July, 7:30 in the morning. So if you guys are able to join, feel free. If not, then I'll just put it on a recording, send you guys a private link on YouTube, and then you'll be able to rewatch it when you're able to do so. Thank you very much, team. Have a great day, and I'll keep you guys posted. I'm not too busy at all today. All the best.
Thanks, Charles. Cheers.
Welcome, Frank. Take care, Denise. Take care, Rob.